All right, what's up, guys? Good morning, good afternoon, or whatever time you're watching this video right now. So today we are going to be doing a very simple thing. That's a trade breakdown for Gbpusd this morning, and of course, I'll be showing you people how we're able to catch over, a lot of people this morning. That's a total of about 80 pips this morning, all right, on Gbpusd. And I also do the same thing on EURUSD. And of course, we're able to catch there about 50 pips plus or thereabout. So I'm going to be showing you exactly what happened and of course how we're able to do this. So to get started, basically, as a day trader, when you get started with your trading for the morning or for the day, you always want to see what the higher time frame is saying, because basically understanding what the higher time frame is saying would give you a clearer picture of what basically is happening on the lower time frame. So right now I'm on a daily, okay, and on a daily time frame, we can clearly see that we were moving to the upside, okay. The market was basically moving to the upside, breaking structures to the upside. First of all, we had this shift in a change of character here, and then we had a continual break of structure to the upside. It just continued rallying right up to the point where the market decided to stop going up and then started coming down. And of course, it gave the signs of coming down, where we had this little change of character that occurred here. As soon as this change of character occurred, we observed that the market pushed down a little and then pushed back up to fill in some imbalances that are left behind at this area, and then now moved down, drastically. And then still here we see that after this move happened to the downside, we experienced a little, structure break here, and of course another structural break here. All right, now we had the pullback, and then we had maybe kind of a rally to the downside, but this looks like a strong resistance zone because of what happened here. It looks like a strong resistance zone, but we know that so far as this level is taken out, the market might shoot down to fill in more imbalances available at this level, available again right at this level. All right, and then all of these lows be taken out before the market might likely shoot back up. But that is basically what the daily is telling us. If you want to look at what the weekly is saying, all right, if we have to just maybe delete everything again, look at what the weekly time frame is saying. That is basically how we did it, and then we're able to catch what we caught. Now, what is the weekly time frame saying? The weekly is basically telling us that yes, the market was shutting down, and then all of a sudden we saw that a high was taken over, and then now we saw that another high again here was taken. But as soon as high was taken, the market tapped into what? It tapped into this level of supply here. And as soon as the market tapped into this level of supply here, hence the reason why it started, rushing down mad after tapping into this level of supply. And of course, the market started pushing back to the downside. And in pushing out to the downside, we know that the market is heading now to the last demand zone that caused this break of structure to the upside, which is basically this zone here. Okay, this is the last sell to buy candle that caused this push to the upside. So on the daily time frame, we are on a weekly time frame, we're expecting that the market will definitely push back here, and then possibly before moving back again to the upside if the trend has to continue. So that was the understanding that we did, and we knew that of course the sellers are in control of this market. Now, having understanding this, and then going down now to the daily time frame, as I've already analyzed and we've seen, we stepped directly straight to the 4-hour time frame. Now, the 4-hour time frame, looking at what the market was basically doing here, we saw that when we opened the market today, we saw that basically what the market has been doing is the market has been creating lower lows and then higher lows, okay, or lower highs. Let me put it that way: lower lows, lower highs. You can basically see the movement of the market. Okay, it has been doing this, even though down here looks some sort of like a consolidation because it didn't take out these lows. These lows were not completely taken out, but we already understand the overall direction of the market, and we know that we should definitely be looking for selling opportunities. Now, with that in mind, let's get straight into how we're able to catch, what we caught today. Now, normally how I trade is that when I come to the market, I always like to map out, I like to trading with price action, mapping out exactly what the market is doing currently before looking at what the market may possibly do. I already understand the general bias. So I map out my previous day high and previous day low. So Monday yesterday, what the market did, this is in this trading column is basically what the market did for the whole of yesterday. All right, so looking basically into what happened to yesterday, and I understand that we're in a downtrend, then I should be looking for areas of supply. Okay, I should be looking for areas of supply in this market because I know that supply is basically stronger than demand. So we push down again to the 1-hour time frame. On the 1-hour time frame, what can we identify? We can identify that the market created these equal highs here, okay, and these equal highs here are seen as levels of what? Of liquidity. In as much as this was a previous day high, but there are equal highs, and of course, equal highs are being seen as levels of liquidity. Now we are looking at liquidity. We should basically be looking at other supply zones that are higher from that zone. So we have the first zone, which is somewhere around here. Okay, we will refine this as we go down to the lower time frame. We have the selling zone somewhere around here. I'd like to just map out this whole zone, or possibly let's take the zone immediately above that. Okay, we will refine this as we go down. So we had this zone. I had this zone that I checked out, and then now the other zone above, that we checked out, and the last zone surely somewhere higher than that. But I know that GPUSD does not move more than 100 or 150 pips in one day. So that is basically what I'll do. And of course, you get that from the mastery when you have been trading one particular currency for a long time. Now, why am I choosing this level of supply? Because we see that this level of supply, supply prices down, that we have this, change of character here, and then we have break of structures here to the downside. All right, caused by what? Caused by those levels of supply. Now, understanding that, what therefore should we expect? We should expect that the market will basically tap into any of these levels of supply and then shoot down to the downside. And then let's go down again to the 30-minute chart to refine. Now the 30-minute, what I'm looking for now is the supply zone that has imbalances. All right, the supply zone that has imbalances. Remember what imbalance price action is. If you don't know what imbalances are, of course, and sure, I'm going to drop a video on imbalances, and of course you can watch and understand what imbalances are. Now, looking at imbalances are basically unmitigated zones or areas that price has not filled. And of course, if you can look at this area here, you discover that there was a high selling pressure here that left at this zone unmitigated by price. All right, the nature of the bank is that they sell, they buy, they sell, they buy, they sell, they buy. So whenever there is a massive sale like that, it leaves behind imbalances that the market will basically come back up to fill before the continuation to whatever direction the market was basically heading at. So understanding that, basically what we subliminally did was that we were mapping out or looking out for these imbalances, because the supply zone that has these imbalances are much more better off, because the market, after filling that supply, will definitely go to look for more liquidity to the downside. So the first thing we did is identify our selling zones. And after identifying our selling zones, of course, we looked for the zones that had imbalances. And after seeing the zones that had imbalances, basically the next thing I always try to do is to map out liquidity. You know that the market is always looking for liquidity, whether sell side liquidity, buy side liquidity. The market is always looking for liquidity. Now, with that understanding, we can basically see here that we have liquidity that is lying above these highs as an already said, and that is why, as someone who mapped out previous day levels, I still don't trade off of them alone. I always try to identify liquidity. So I saw this liquidity, and basically that's the reason why, no matter what the market was doing at this area, giving me signs of weakness to sell, I was not involved in selling here until I see that this liquidity on the upside has been cleared. Also, we have downside liquidity. So we had this liquidity resting here in the form of equal lows. Okay, we had this liquidity resting in the form of equal lows, and then we had another liquidity that was resting. This one had not yet happened. All right, this one had not yet happened, but we had another liquidity that is resting on some sort of a trend line. Now, those traders who trade just trend line, of course, they would have had their trend line here, and of course, you discover that this is trend line liquidity that is lying here and will basically be collected. So if you trade just off of trend line and you don't take into consideration supply and demand, that is basically a big error, and maybe probably one of the reasons why you keep losing in the forex market, because you must try to understand that the market moves according to the laws of demand and supply. That is what you cannot overemphasize. So understanding that this is the supply zone, what basically happened next? We saw that the market spiked up and then cleared out some level of liquidity with this huge 30-minute candle. Now, after seeing this 30-minute candle spike up and then tap a little bit in our zone, of course, we will find again the market right down, start looking for possible entries. Now, on the 15-minute chart, as soon as we saw that this bearish engulfing candle was created here, then that was what gave us the confirmation for our sell. Why? Because we noticed that the market has given us a bearish engulfing candle into our supply zone. If I'm to go down to the 5-minute again, we will see clearly that, of course, we'll be talking about momentum rejection. You see how the candle rejected to the upside and then get that bearish engulfing candle again to the downside. And just to refine again to get a much more precise entry, you discover that if I go on a 1-minute time frame, all right, if you go on the 1-minute time frame to refine and then get a just so perfect entry, what do we see? We simply see that as soon as the market tapped into our zone, okay, as soon as the market tapped into our zone, we get the first pull back, went up again, then came down. As soon as it came down, what happened? We saw this change of character that occurred here. As soon as you saw this change of character, you know that what the market will pull back into any levels of supply available here that the market left, push down prices. So what you basically want to do is start looking for short positions off from this level of supply, and this is the best way of trading, understanding and focusing on market structure. All right, so you see that the market change of character occurred here. As soon as this change of character occurred, you know the market is going to pull back into that level of supply and then push downward. Now, I always like to be more conservative for my stop loss, so I put it slightly above the supply zone. Some traders would like to put it, here, but I always like to, put it above there because of manipulation and other reasons. So the risk on this trade was basically just about 12 pips. All right, there you have it. Was just basically about 12 pips. And of course, what were we targeting? We were targeting all the external levels. Let me go down again. Okay, we're targeting all the external levels, external range liquidity that was lying below. Okay, we were targeting all the liquidity that was lying below that low. So if you look at this clinically, of course, we drag it down. All of these levels to the left were our TP levels. So as soon as the market hit this first level, it was the first take profit level, but we still see that this liquidity on this trend line has not been taken. Now, some trend line traders are going to be doing what I hear. After seeing this momentum rejection here, I'm basically going to be looking for buying opportunities here to take it, to take it above. This is what basically trend line traders will be looking at. But remember, as smart money traders, we are focused on liquidity because we know that the market is always seeking to clear liquidity. And if you don't know where the liquidity is lying in the market, of course, you are basically the liquidity. So looking at this very well, we see that the market spiked down and then rushing down and giving all that 80 pips drop, and the trade now became just so massive. But as soon as the market collected this liquidity here, okay, as soon as the market collected this liquidity that was lying below here, I was already out of the trade. Okay, I wasn't in the trade again, but I was just watching to see exactly what the market was going to do. So we're risking 14 pips, and of course we're going to catch 45 pips. That's basically about a 1:3.18 risk to reward ratio. And of course the market came down, to give a whooping 1:5. That's about an 80 pips. 1:6. That's an 80 pips to those who or to other people, maybe other traders around the world who saw the trade and were able to catch the same thing. So that is basically what happened on Gbpusd this morning. And of course, if you were to look over on the Eurusd is one of the trade that was taken. And of course, how we caught the trade is similar. I've not even removed you can still see that my analysis was still very there. So after mapping the previous day high, previous day low, remember I'm also looking for what levels of supply. All right, let me go back to the 4-hour time frame and then we're able to look at that. Okay, looking at the 4-hour time frame, I basically see that the next level of liquidity that the market was supposed to take before going down was available above these highs. But looking at this candle here, I see that this candle here already cleared out that liquidity. Okay, this candle here already cleared out liquidity, which means that there was nothing left for the market to come up and collect again. And of course, it had to go down. So looking at it carefully, we go down again now to the 1-hour time frame. After mapping that out, I wanted to see some sign of weakness to tell me that, hey, guys, sellers are in control, because you never just want to jump into the trade. And the sign of weakness is that on a lower time frame, at this level, or maybe probably on the 15-minute time frame, I am expecting to see something like this: a change of character, a pullback, and then now before I can take the trade, following it to the downside. Now, I really love the trade of Eurusd very, very well, and of course, because it gave a clear signal that that's basically what you wanted to do, and that's why you're never advised to force trades. Whenever you have a loss, you're just advised to stick to the market, keep with your strategy, and of course, see how you can do with it. Now, after looking at what happened, we map out our previous day high, previous day low. I always take note of that because I know that Gbpusd and Eurusd will not move about 50 to 80 pips at times in a day. If you can measure this here, you would see that. Let's take it from here to here. You see that's about 68 pips. So that Eurusd moves about averagely of 50 to 80 pips per day. All right, or thereabouts, based on what I've been able to study and see about the Eurusd. So I trade just basically two currency pairs, and of course this is DXY and this is Bitcoin, which I don't really trade. I just keep it there to see what is happening. So looking at this, I went down to the 15-minute time frame. Now on the 15-minute time frame, I was just watching what the market is doing, and then all of a sudden I saw that if you look at this is a structure. All right, this is a structure. All right, you have this is a structure. This is a market structure here. Then I saw that the market pushed down here. What did it do? It broke, and then we had a change of character. As soon as we had a change of character, what happened is that the market pulled back up. But I still saw that there was some sort of equal highs, but I didn't really care because I knew that this had already cleared out liquidity. So as soon as I saw that, I just had to, look left and then map out some higher levels, and that's why you have this line that I drew here, some higher levels that I knew that the market could basically go back there to clear liquidity for going down. But as soon as I saw the change of character on a 15-minute time frame, I basically knew that the market was about going down. Then I started going down again now on 5-minute time frame to start looking for my entry confirmations. I really didn't see anything clear because the market was still pushing very, very bullish. But after we saw this bearish engulfing candle, it was enough reason for us to enter the trade. But then again, I always don't like to enter like that. I always like to still refine again to the 1-minute time frame to get just that perfect entry confirmation that can be of great risk to reward. It can be a very, very huge risk to reward. So what happened is that I went down again to the 1-minute time frame after identifying that we saw that yes, the market was pulling back into our zone. Okay, the market pulled back into our zone. Remember, we said we had that change of character, and of course, we had the market pulling back into our zone. Of course, I identified this zone here, which had the imbalance price action. But as soon as the market got into that zone, it started pulling off and then almost break that zone. But when it spiked above here, I just saw that okay, the market was collecting some liquidity that was lying on these previous highs here. So the market pushed down, and then we had this little change of character. As soon as we saw the change of character here, we knew that anything pulling back here is basically to fill these imbalances here before the market down starts selling down. And as soon as we saw that, I started layering now our positions, layering now, and of course targeting the sell side liquidity, So my stop loss was about 10 pips thereabout, also giving space for the market to be able to break. All right, giving space for the market to be able to break. 10 pips thereabout, and I did this intentionally because of this little spike that happened here. But normally, smart money traders always make sure that they put their tight stop loss above the previous highs. But of course, I always like to give my trade more room for it to break. So I kept it, 10 pips, and of course, making it simple, keeping it simple, and then going on now to my 15-minute time frame again to start targeting. Okay, where possibly would the market reach, and then my take profit levels. Very important, guys. Take profit is always important. Take profit levels. Where are you collecting your money out of the market? That's basically what is very, very important for every trader to practice. All right. So looking at this, as soon as the market came down and then crushed throughout this level, crushed this low here, we collected our first take profit, and of course they were already good, and then we break even on the remaining trades. All right, that was 15 pips drop already, and of course this is the overall target of the trade, or that was the overall target of the market, knowing that at this level down here there is some imbalance that basically the market has to tap into, and of course this is another level of demand here that caused this break of structure that happened here to the upside. So looking at the trade carefully, the market, we also saw that this trend line, of course, break and retest, trend line traders will see like break and retest, but of course, I was seeing it as what? As some sort of liquidity that the market has to clear. And then looking at these lows again here, after the market took out this one, we know that, okay, this is extra levels of liquidity that the market has cleared. And that's basically how we're able to catch on Euro USD. But as soon as Euro USD cleared out this liquidity and then tapped into this level, of course, we collected our profits as at this level. And that was about 34 pips, 34 pips. So we're risking 10 pips to catch 34 pips. That's about 1:3.25 risk to reward ratio. And of course, hoping that the market will still drop right down here before buying back up. So that is basically how we're able to catch over 80 pips on GBPUSD, and of course over 35 pips on Euro USD this morning London session. If you would like to learn more about forex trading, of course, know how you can catch moves like this, ensure to like the video, comment on it to keep seeing more updates as we drop our videos that are coming. And of course, if you love the video, make sure to share, and of course hit that subscribe button to subscribe to our channel to keep getting more updates. Now I'll give you a free signal before I go, and that's basically what I'm expecting Euro USD to do between now and tomorrow. So it's very, very clinical what the market has already done, because if you look at Euro USD right now on a 1-hour time frame, all right, if you want to remove everything on the chart, all right, if you look at it, let's just say on a 1-hour time frame, 4-hour time frame is just perfect. So on a 4-hour time frame, what do you see? We basically will now see that the market has basically done what? The market has basically allowed an imbalance here. All right, so seeing this imbalance, what do you think will happen? It's simple. the market has to come into this imbalance, fill it, and then take prices lower. That will be the expectation for Euro USD. And of course, let me show you guys again for free. The expectation on GPUSD, all right, is basically the same thing. All right. How do I know? I've been mastering these currencies for a very long time now. What do we see here? Of course, we see this imbalance that is available here on the 4-hour time frame. So what do we know? The market is basically going to find a way to spike into this level. All right, to spike into this level before selling down. If you want to see how that is going to happen, make sure that you comment on this video, like it, so that I'll upload the updates of these profits to you tomorrow. If you enjoyed the video, make sure to subscribe, and of course, see you next time on our next video. And of course, guys, peace. The link to our Telegram community is going to be under this video, and of course, the link to also chat me up on WhatsApp is going to be under this video. So ensure to click on it if you want to ask me any questions. Thank you, guys. Peace.